Hello, my name is Nitesh Pandey and this is my CRLI 6 trimester report, which is based on green financing, a study on the effect of green bonds on the sustainable future in India. So I'll start. So first of all, introduction of my report. As world temperature is rising regularly due to global warming, to tackle this issue, countries around the globe are coming together for the betterment of climate. Sustainable projects are the need of an hour that we need. So to provide financing to the sustainable project is called green financing, and there is an instrument called green bonds through which green financing is done for the sustainable projects. Proceeds from the green bonds are used in energy efficiency, green infrastructure, renewable energy, and water improvement. If we go deep, then climate change is threatening the world, and climate experts have confirmed the human activity is responsible for 97% of the observed change in climate. Some of the natural indicators that this change is occurring include the rising temperature of the air, rising temperature of the air, and due to rising temperature, we can see the glaciers are melting and it will increase the water level, and which leads to various difficulties for the survival of human and the temperature rising itself. It's a very complex stuff. So I can give you a brief history about it. In 2015 saw the introduction of INR 1000 crore green bonds into the Indian financial system by Yes Bank, and then 600 crore by CLP India. Axis Bank Limited issued the first globally recognized green bonds, used used and valued almost around USD 500 million. By 2018, this market had grown by 50,000 crore. Following the release of green bond guidelines by SEBI in 2016, there were significant bonds market issuance. In 2018, SBI released $650 million green bonds. So this is the brief history according to the Indian market as concerned. And if I need to talk about green finance in its utmost introductory form, green finance is any systemized physical exertion, similar as service or product, that's designed to guarantee a better environment result, to consist or to make a range of investment, physical instrument, and loan intended to promote the growth of the business. What are the significance of green finance? The significance that can I can give it to this project itself is among the enterprises accepted by UN environmentalists are aiding national inner engineering, and apart from the consumption of clean energy source can be eased by sustainable admixture of strategy, prudence, capital, vacuity, and planning blessings to make similar system more charming than energy structure created from fossil energy. Typical platform categorized as green finance include renewable energy and energy effectiveness, pollution, forestallment and control, biodiversity conversion, indirect futility enterprise, sustainability use of nature. So in the history, in the year 2007, the Intergovernmental Panel for Climate Change, a United Nations agency, published a report that linked global warming and mortal exertion. It urged several Swedish pension funds to consider backing systems that contribute appreciatively to the train. In 2008, the World Bank issued its first green bond in response to similar aiding demand movement. Further than 50 countries have issued green bond, with the United States being the largest source of green bond. The association Climate Bonds initiate a precious resource for those who wants to follow the green bonds request growth. What are the advantages of green bond? The popularity of green bonds has been steadily increasing, not because they offer a higher risk or return than conventional bonds, but rather because investors are supporting social conscious investing. As previously stated, green bonds function in the same way as traditional bonds, in the same way as duty credit and duty penalty do. Green bonds may provide duty incentive based on the issuer and governance. It's done to attract investor in finance system and provide profit to the climate as well. A wider range of investors, particularly those that prioritize environmental, social, and governance factor, may be drawn in by issuing green bond. This may result in more bond demand and possibly cheaper borrowing rate for the issuer. If I have to give the reference of literature review of my report, I can give reference and I would quote A. Verma and Agrawal report. The study critically examined all potential of the GB market and showed certain challenges with future steps as necessary for future development. Apart from Gupta and Jam 2021, they provide that the potential of three financial instruments, namely GB, asset-backed project bonds, and LCY corporate bonds, was highly evaluated by the study. The findings suggest that proper usage of three instruments to fill financial gap in the Asian region. Following with, I have quoted Prakash and Sethi 2021, Bhatnagar and Sharma 2022. So my objective for this report is to study the social impact on companies who issue green bonds in India, to issue factors that impact investors' decision to invest in green bond, to identify challenges facing the green bonds market in India. The research methodology that I have kept is descriptive, and I have gathered information from the variety secondary sources including publications, journals, websites, articles, and published report. I have put over the data, interpretation, and analysis based on these methods. And last, I would conclude my. Before concluding, I would say what are the challenges that, as an green bond market in India, the flow of green bond are present certain difficulties such as poor sovereign rating rated triple B, high cost associated with currency hedging, short duration, a less explored market in the context of India. The cost benefit of currency financing in India is eliminated due to the higher hedging cost. This is one of the major challenges. Lastly, market liquidity and investor appetite are required for green bond is also a concern. I would conclude by saying green bonds have been a significant part of India's sustainability journey and will continue to be a part of this journey. Green bonds are primarily source of long-term and convenient cost of capital for green project developers. Define green appropriately and encouraging transparency promote the issuance and investment in green bonds. Projects like mitigation and adaptation towards climate change, promoting responsible environmental attitude, recognition of our physical, legal, and transitional financial risk has led to the emergence of the concept of investing in green funds and green bonds. One of the biggest obstacles to this dice is also ignorance. The study tells us about the social impact on the green bonds issuer in India, followed by factors that impact investor decision making while investing in green bond, and lastly, the challenge green bond is having to linked with climate, which is the most crucial part when it comes to other bond is concerned. That's why this is the need of the time. That's my time. Thank you.